Hello, my name is Ketan Agarwal. I'm a financial advisor and I'm investing in stock market from last 6 years now. And I have a very good understanding of the market now. So I thought to help out others who wants to invest their money in the market but are not able to invest as the stock market is very complicated place and are scared to put money in the market or have already lost money in the stock market or have seen their family and friends losing money in the market, so they choose to remain out of the market. So for this reason a lot of investors choose to invest their money in fixed deposit as it is considered as very safe investment, but at the same time end up getting only 7 to 7.5% per annum as a return, whereas in stock market one can earn at CAGR of 20 to 25%. So if you compound for 5 years, the difference between fixed deposit and stock market will be huge. For an example, 1 lakh will become 1,43,000 in 5 years with 7.5% return per annum in fixed deposit, whereas in stock market 1 lakh will become 3,05,000 with in 5 years with CAGR of 25%. So you can compare the difference between these two figures, right? So here in this video I'm going to recommend your stock for long term, and I'm going to give you a reason or my analysis to buy that stock. So but please you do your own research before you buy that stock. So like this, every week I will recommend you a stock to buy. So please subscribe to my channel and click on the bell icon so you do not miss any important video. So let's start with the analysis. So before we start with our analysis, I'm going to tell you three important things. First one is, please go through all the points given here. Please pause the video and go through it so you don't miss anything. Second is, in this particular video, I'm going to cover only fundamental analysis of DHFL because this one is for long-term analysis. In my another video, I'm going to cover technical analysis of DHFL, and that video will be for short-term buy or sell. And in that video I'm also going to cover futures and option of DHFL. Okay, so please wait for my second video. And third thing is is that this video I'm going to make in English, and I'll be putting another video of the same analysis in Hindi language. So ये वीडियो मैं इंग्लिश लैंग्वेज में डाल रहा हूँ, इसकी सेकेंड वीडियो मैं बनाऊँगा जो कि हिंदी लैंग्वेज में रहेगी. ठीक है, so let's start. So this is the analysis of DHFL, and it is a long-term analysis. DHFL is a company which is into housing finance. Like they are into housing. They give loan to retail borrowers in order to buy or construct house. So starting with industry analysis. So we know like Indian housing finance industry is growing very fast. The reason why it is growing very fast because people have emotional value with the house. Like everyone wants to own a house. That is why the demand for houses are ever increasing. Second one is mortgage lending is a strong driver for growth of this construction of houses in our country. Like most of the people take mortgage loan in order to buy or construct house. So the demand for loan are very high. Third is like because of the high demand, the industry has witnessed a growth in the demand for loan at the rate of 26%. You can see a CAGR of 26%. It is going with the rate of 26%, which is a very good thing. Third is India needs like more than 5 million houses annually, and the thing is 90% of that demand comes from affordable housing segment, which means that people wants to buy 1 BHK or 2 BHK, like which comes in the range of like 30 lakhs to 60 lakhs. Okay, and the gap between demand and supply is very high. Supply is like being the 10% less than the demand, and like smart cities are going to come. So because of that, the demand for houses are going to increase even further because of people from smaller cities and village will move to bigger cities, or from village they are going to move to tier 1 tier 2 cities. Okay, and you also know like the increase on the nuclear families are increasing very fast because like because of the small family size, we have like smaller family now with houses with just one couple and one children or something. So they want to buy a smaller house like 1 BHK or 2 BHK. So okay, so DHFL is a company who target this type of customer who wants to buy 1 BHK or 2 BHK houses. So we can see here, like, this is about DHFL, and DHFL is a housing finance company which target lower and middle income group, and they also expanded the business to insurance, mutual fund, and education loan. And they also give like commercial property loan, land loan, and more SME loans, small and medium enterprises. And they have pan India presence with 182 branches, 146 service centers, and 16, and they are present in 18 circles. So the strength can be they have an extensive distribution network, they have industry expertise because of the management of the company is very good, that's why they have industry expertise. And there are two separate verticals for housing finance loan and non-housing loan, because so that they can focus in their core business. Some of the opportunities can be like they have diversified their business into mutual fund and insurance, so the house insurance can be sold to existing loan borrowers, so that is a very good thing. And it will help the company to grow very fast because of that. And the second one can be like because of the increase in the nuclear families in cities, the demand for affordable housing segment is going to increase even further. So this was my basic analysis of the industry and the company. Next, what I'm going to cover is financials of DHFL. Okay, let's start with the financial analysis of DHFL, starting with balance sheet, quarter results, profit and loss account of last 5 years, ratios, price to book value ratio, and price earning ratio. So starting with balance sheet. Here, before we start, I want to tell you that here in the financial statement, I have not taken each and every item. Like, I have taken only important items. Like on the liability side, I have taken only 3 items. On the asset side, I have taken only 1 item. There are other items in the balance sheet as well, but those items are not very important for the analysis of this particular company. Okay, and all figures are in crores. And here is my comment or remark, which if you want can pause the video and read. Like for each item I have given a comment, like share capital, total reserve, long term borrowing, and long term advances. So starting with share capital, in 2013 you can see company had a share capital of 128 crores, and now they have a share capital of 313 crores. So there is an increase you can see in 2015, 2016, 2017. Each year there is an increase in share capital. So normally if each year share capital is increasing, then it is not considered as very good, because it is said that like company is not able to run the business. That's why company is raising funds again and again from the market, like in the form of follow-up public offering. But that particular thing doesn't apply here, because if you see the ratio of the company, like return on equity, it is same. It was 15% before, and after raising capital also it is 15%. So the company has raised the company has used a raised capital very efficiently. So this is not a bad sign here. Next is total reserve. What is reserve? Reserve is like part of the profit which company keeps with themselves in the form of reserve in order to deal with the contingencies, like any uncertain event comes up, then company should have sufficient fund to deal with it. If you can see here in 2013 company had a reserve of 3108 crores, and as of March 2017 they have 7682 crores. So there is a jump of 147% in their total reserve, which is a very good thing. Next is long term borrowings. So here you can see there is a constant increase in their long term borrowings from 26,564 crores to 66,753 crores. But here for this particular company, it is not a bad sign. If it is like some other company, like if it is a some electronic company and their loans are increasing every year, then it is a bad sign for them. But for this particular NBFCs, it is not bad, because how this company works is they take a loan from other financial institutions at lower interest rate, and they give that that money to retail borrowers at higher rate of interest, and they, in between they make a profit. So here if you can see their long term borrowings have gone up. Also their long term advances have also gone up from 32,402 crores to 68,637 crores. So they have taken loan here, and they have given to that amount money to the retail borrower at higher rate of interest. So here company is going to make more profit because the loan amount is bigger now. So they are going to earn bigger interest amount, right? So next is quarter results. So the next thing is quarter results. So under quarter results, I've covered 4 important items: income from operations, earning before interest, tax, depreciation and amortization, net profit, and profit after tax margins. And below are my comments. You can read if you want to read. You can pause the video and read it. Starting with income from operations. What I'm going to do here is, this is Q2 results of financial year 2017-18, and this is Q1 results, and this is September 2016 quarter results. So I'm going to compare Q2 result with Q1 result, and September 2016 result with September 2017 result with September 2016 result. So if you compare, if you see growth in Q2, when you compare it with Q1, you can see the growth percentage is 8.45%. Growth from last quarter is 8.45%, which is a good sign. The company is growing, and you can see quarter after quarter company has gone up, which is a very good thing. And here percentage is more if you compare between these 2 quarters. Now if you see the growth percentage from September 2016, then it is DHF income from operations have gone up by 20%, which is again a very big number. So if you compare it, like I've written down here in my comment, if you compare, the growth percentage from last quarter is above the industry average. When you are comparing with performance of DHFL with the industry, then the growth percentage from last quarter is above industry average when it's compared with other housing finance companies. And when the growth percentage is compared with the September 2016, then it is as per industry. So DHFL has performed better than other financial housing finance companies in this particular quarter. Something has happened, something has changed in DHFL, that is why they perform better in this particular quarter compared to other companies. EBIT. The next is EBITDA. Like NBFCs enjoys very high margin EBITDA margin. The reason is that their major cost in their profit and loss statement is interest, which comes after this. So that's why they have very high margin of EBITDA. We can see the increase in EBITDA margin is 7.69%, and if you compare from the last quarter, and if you compare from the last September 2016, then it is 17.73%. Next is net profit. If you see net profit, it was 232 crores in September 2016, which is now 293 crores, which is like 26% more compared to the last September. And if you compare from last quarter, then it has gone up by 12.6%. So here is one interesting thing to note. If you compare income from operation and net profit, if you see income from operation gone up by 8.45% in the current quarter, whereas net profit gone up by 12.6%, right? So something has changed in the financial statement. Like the company is running more efficiently now when you compare to the past. So some cost they have reduced. It must be a financial cost, so which we are going to check later. Okay. So here is my one important comment. In the above analysis, we can see the growth percentage has improved in the last quarter, September 2017, and if it continues in the coming quarter, then we can see huge growth in short term, and that is in 1 to 2 years in DHFL stocks. Next, we are going to cover is profit and loss statement. So the next item is profit and loss statement. Here I am going to cover. I've taken profit and loss statement of last 5 years, starting from March 2013 to March 2017, and I have taken 3 items: income from operation, profit after tax, and EPS, and down below are my comments. So here we are going to see like how company has grown in last 5 years. Okay, starting with March 2013, you can see income from operations was 4,140 crores, and March 2017 it was 8,857 crores, which was, here you can see the growth percentage in last 5 years is 113%. Okay, so if a company has grown up in 5 years by 113%, it means if you're investing a company, like making an investment in company like this, then your investments is also going to go up somewhere at the same rate. Okay, if you compare the financial performance from the last year, March 2016, then it has gone up by 21% again, which is a good rate. But the thing is, if you read my comment, when it is compared within the industry, then the growth percentage from last year is little below the industry average. But when you compare in the last 5 years, then it is as per the industry average. Okay, so here you can see like it is little below the 21% is little below the industry average. Okay, next is profit after tax. Profit after tax, if you see, first let me tell you, here you can see in March 2017 you can see a very big number of profit, very big number, right? 2,896 crore, 96 crore. But if you compare in like previous years, if you see, it was only 3-digit numbers. Okay, so there is a big jump. This is not actually a profit. I'll show you why. If you go to the profit and loss account of DHFL, here you can see this is DHFL. Go to financial statements and then go to profit and loss statement. Here you can see this is March 2017. Here you can see this is exceptional item. Okay, that's why companies are having very big amount of profit after tax in the current year, in the last year, March 2017. So this exceptional item are not like regular item. These are like something will come, like company has sold some old asset, and they have sold and realized some is a profit from that very old asset, or they have won any case which was against them. They have got some sort of financial benefit from that court case. Then those type of items will come under exceptional items, which do not happen on a regular basis. So while analyzing a stock, we are going to ignore that exceptional item. Okay, whether it is a profit or a loss, we are going to ignore that particular item. So if you remove that particular item, then the actual profit was 927 crores. Okay, so if you compare profit after tax from the last year, which is March 2016, then growth percentage is 27%. And if you compare from last 5 years, if you compare 2013 and 2017, then growth percentage is 105%. Okay, so if you say in the current, if you compare like income from operation and profit after tax of last 5 years, you can see income was more, but profit percentage was less than the income, because company was not operating very efficiently. Their cost of capital was not that good. It was very little high. But in the current In the last year, if you see income from operation, growth in income from operation was 21%, but profit after tax gone up by 27%. That is reason is that because the cost of capital came down. Okay, but if you have one more thing I want to tell you, that if you read my comment here, NBFC enjoy good profit margin when it is compared with other industry. DHFL profit after tax grew like 27.12%, which is little below the industry average, but we have seen some improvement in September 2017 quarter. Okay, there was some improvement like which I didn't cover before. I'm going to cover now. If you see profit after tax margin in September 2017, it was 11.24%. If you compare it like from before, it was less, 10.82%, 10.35%, 10.73%. Again, this figure is because of the exceptional item in the balance sheet. Okay. So coming back to profit and loss account again. Here you can see like in the current quarter we have seen some improvement. So I think in March 2018 report will also be good, because cost of capital is coming down for DHFL now. So that positive thing can be seen again in March 2018 financial results. EPS. Next is EPS. If you see EPS of the company, like it was growing here, again it came down. The reason it came down, and again it is improving. The reason it came down because company raised fresh capital from the market. That's why earning per share the capital of the company came down, but it will improve eventually as the company will start making more and more profit from that capital investment. Whatever company raised the fund, they would have invested somewhere, and company is going to get benefited from that investment in the future. Next we are going to cover is ratios. So the next thing is ratios. Okay, here I'm going to cover 4 ratios. I'm going to cover ratios of last 5 years, starting from March 2013 to March 2017, and I'm also going to compare ratios of DHFL with other housing finance companies, like all this you can see here. Okay, I'm going to cover with all these companies. So starting with EBITDA margin. As I said before, NBFCs enjoy big EBITDA margin because their major cost in the financial statement, like profit and loss account, comes only after this thing EBITDA, because the major cost is interest, which is, and here we are talking about earning before interest. Okay, so if you compare EBITDA margin, it is quite constant in last 5 years, and it is as per in industry. It is not like below industry. In some of the cases, like other companies are having very good EBITDA compared to DHF, like Indiabulls Housing Finance having 98, LIC Housing Finance having 93, Canfin Homes having 93, but it is okay, like not bad. Next is profit after tax margin, and this is very important here. So the thing is, if you compare profit after tax margin of DHFL of last 5 years, and when you compare it with other companies, say in last 5 years the profit after tax margin of the company has not gone up till March 2017. You can see it is same. It is quite same. It is in the range of 10.46, 10.6. It is below 11. Okay. The reason you are seeing 32 again because of the exceptional item in the profit and loss account, but actual thing will be this 10.46. But when you compare it with other housing finance companies, then if you see their profit after tax margin is so high, 19% here for Graph Finance. For Canfin Home it is 17%, LIC Housing Finance having 13%, Indiabulls having 28%. Okay, but here DHFL is lagging behind. The reason is because the cost of capital for DHFL is quite high. But there is a positive thing here now. The cost of capital for DHFL has already started to reduce, and the effect of that we can see in quarter results of March 2000, September 2007, and that's why here we can see 11.24%. But here it is till March it was 10.46. So positive things have started for DHFL now. So now we have to check in the next quarter also. Okay, and these things will keep improving, then DHFL is going to catch up with the industry very soon. Like even it will reach in the range of like 16%, 17% or 19%. Okay, so that time the company will grow a lot if it manages to reach that level. Next is return on asset. Okay, return on asset for DHFL is not bad. It is as per industry if you compare, and it is above other. And if you compare in like March 2017, it was above other companies, which is a very good thing. Return on equity, if you say, it is quite below industry average. If you see like look other companies, Indian Bulls having 25, LIC having 19, Canfin having 24, Graph Finance having 30, but for DHFL it is quite less when you compare, but it is improving. Like it will improve because financial cost of finance and the cost of capital is coming down, so the profit after tax will improve, so the return on equity will also improve. Okay, so next what we're done with the ratios here, and next we're going to cover price to book value and PE ratio, that is price earning ratio. Thing is price to book value and price earning ratio of DHFL. So here we can see DHFL is trading at 2.48 times of the book value, whereas the industry average is 5, and the book value of DHFL is 246 and current price is 611.55. The reason why DHFL is trading at 2.48 times only when compared to the industry, when industry is trading at 5 times, the reason is because DHFL is lagging behind due to the higher cost of capital. But we know from September quarter that gap is minimizing now, so even DHFL will try to catch up with the industry now. So if cost of capital comes down even further, and or even if DHFL continues to maintain this cost of capital in the future also, then DHFL will start to grow faster. So if it catches up with the industry, so we can expect somewhere 800 price level, or even more, like around 1200 we can expect. The reason why I'm telling is that suppose if DHFL catches up with the industry, then you can check here. If you do simple calculation, this is the industry average 5, and you multiply this with the book value. Sorry, there's a mistake here. You do industry average is 5 into book value, which is I'll write it 246. So somewhere here you can see 1230. And next is like price earning ratio. The industry average is 28, but DHFL is trading at only 19.95 times. So what is the formula for price earning? It is nothing but current market price divided by EPS. Again, the reason is it is behind the industry average because of the same reason. And if things changes for DHFL, then it is changing actually. So in the future, DHFL will try to catch up with the industry. And suppose if it reaches like 28, even it becomes 28 times of EPS, then the future price can be somewhere, you can calculate again, 28 multiply by 30.64, you can see around 857. So I'm expecting DHFL to trade in somewhere in between these two prices in the next 1 to 2 years, because things are changing for them. And thanks for watching this video. In my next video I'm going to cover the technical analysis of DHFl, where I'll be studying the same futures and option also. You can trade in future and option also, so please wait for my second video where I've covered technical analysis of DHFl. Thanks once again for watching. Thank you. Bye.